Hello, traders. It is Friday, March 27th. Thank God it's Friday. It's been another crazy week. We've got a little bit of market support this week at least. Let's go take a look at the S&P 500 or the SPY. We can see this steep waterfall event. We can see some green candles in here. What does this tell us? These are opens on the low, close on the high. We've had 4 decent days in here. Now, the bigger picture is that asset managers are going to take a look at this and they're going to know that there are buyers. So on every subsequent pullback that we get, we should see a series of higher lows. And the reason for that is that the market is forward looking, asset managers are forward looking. They're not going to wait for a decrease in the number of cases of coronavirus. They're going to anticipate that. That apex typically comes 43 days after the coronavirus has hit a particular country. We know that from China. We know that from Italy. We know that from South Korea. So this is the pattern that plays out. The U.S. is probably 10 days to 14 days away from hitting that apex. So buyers are not going to wait. They're starting to come in and they're starting to buy now. Plus, you've got a $2 trillion stimulus package that was just passed by the House. And this week, I heard Treasury Secretary Mnuchin say that there are $4 trillion in their war chest. Can you imagine that? They're willing to throw everything at this so that they can avoid any hint of a financial crisis. Now, it's still going to take a long time for our economy to recover. When the virus does finally start to subside, we can expect 6 months of choppy back and forth type of activity as workers finally start to go back. There will be geographic areas in the country that start up sooner than others. Right now, the hotspots are the major metro areas where there's a dense population. That's where the virus is spreading the quickest. So if you look at the unemployment claims yesterday, 3.2 million, that was grossly underestimated because the site crashed and they couldn't process all the applications. We're probably going to see closer to 30 million, more than that even. The parking lots are empty, the streets are empty, everybody's home, they're doing what they're supposed to, social distancing. So this curve is going to get smashed down on the virus over the course of the next couple weeks. That means we have to endure one more really bad news week, maybe two, but after that, we should start to see some signs of hope. Also, we have the hydroxychloroquine Z-Pack treatment is currently being documented. Oracle is helping to process all of those cases nationwide, so we should have some better data. It's being mass produced by Teva Pharmaceuticals and Mylan Labs, so people that are in hospitals that are sick with coronavirus will be able to try this treatment. It's been very, very successful in small trials. I expect this to be a very successful treatment for it, and I believe that we'll be able to get past the virus. Maybe it'll take a couple of months or so for things to settle down, but you can see that there is a market bid. So, what does this mean? Pete, should I go out and buy stocks right now? Is this the time to really load up? Is this a buy of a lifetime? Now, tell me now. That's what I hear every day. This is going to be a process. This is not going to be a V bottom off to the races. There are going to be industries that are severely hurt by this, whether it's the car industry or the cruise line industry, the hotel industry. This is going to take time to resolve. So we're going to see a series of rallies and a series of pullbacks, a series of rallies, a series of pullbacks. Over time, we should be establishing higher lows. And yes, there should be a gradual movement higher, but do not look for this to just take right off and slingshot right back up to the high. That's not how it's going to work. Well, gee, if I come in and buy calls, I got to buy some calls right now. And oh, why did the market go down, Pete? You told me this was going to move higher. I'm talking about a long term bottom. In the next 6 or 8 months, you'll be able to look back at this and go, yes, that was an excellent buying opportunity. But if you're a swing trader, you have to be very careful. Right now, the best swing trading approach is to sell out of the money naked puts. That's what we've been doing. We've got 8 positions on currently. Well, what is that stance? That is a neutral to slightly bullish strategy. Actually, we're so far out of the money that it is actually a neutral strategy. Stocks like Google would have to lose half of their value in the next 4 weeks for us to be in trouble. That's the kind of trade that we're currently looking for. So the market can go up, it can go down. As long as this low holds, we're fine. It can even breach that low and we'll still be fine because we've got stocks with relative strength. That's how we're playing it. If these positions that we have on, and we've got 8 positions on, if they play out, we will generate approximately, it's an average of about a 10% return on each one of these trades. That is a fantastic return. That's equivalent to 120% annualized. And we did that because we had option implied volatilities off the charts. I'm going to release a video tomorrow. It's my weekly swing trading video that I put out Tuesday night. I wanted to get it out early because I thought that we might have some selling Wednesday morning and we might be able to capitalize on that. Sure enough, we saw that selling Wednesday morning. We got all but one of our trades done, and then the market took off. So normally I produce these videos on Wednesday nights and I release them to YouTube on Saturdays. This week I did it Tuesday night, so look for that video tomorrow. Now, you might look and say, well, gee, I can't get into any of these trades. That's right. You won't be able to get into them, but you can take a look at the analysis, take a look at the routine that I went through, and why I selected these stocks and why that particular option made the most sense. So there's lots of valuable information in there, and this is the same process that I'm going to be using throughout the course of the next few weeks. So in the initial stages of a bottoming process with option implied volatilities very high, swing traders need to try to sell premium. This is not a buy call environment, not with these option implied volatilities. So you have to sell that premium, and it won't be until we get a rally, a pullback, a rally, a pullback. Then after another 3 or 4 weeks or so, then we should really see those option implied volatilities come in. And we need to get this VXX somewhere down in the 20s before we can start thinking about buying call premium. Because what happens on these rallies is that you could be right on the stock, you could get the move in the stock, and you could still lose money or make a little bit of money, not enough certainly to justify the risk that you took in that position. So this is not a call buyer's market right now. We have to wait. We have to be patient. This will be a process that's going to unfold. So I'm going to end this video with a couple of swing trades that I think look good. And I'm going to go into my chat room right now because I want to show you what I've been doing there. Been fantastic opportunities for day trading right now. And that's what I want to show you. So today, I'm continuing my record. I just posted my trades for today. These were all posted real time in the chat room, and members were able to come in and see each one of them as I posted them. So here's the chat room. And I posted these just before I started the video. These are all my trades, all winners, all from the long side. INO, Amgen, LDOS, Walmart, PSA, STZ, TDOC, RAD, NFLX, PSO. I have one open position, and that's REGN, and I have an order in to try and scratch that, actually make 20 cents on it. It's moved against me currently. So I've got 9 winners, no losers. I had 10 winners, no losers yesterday, had 11 winners, no losers on Wednesday. I'm 30-0 in the last 3 days. Oh, come on. Nobody does that. I don't expect you to believe me. I take the trial. That's the best thing you can do. Come in and watch me do this real time every day. And the reason that it works is because there is a systematic trading approach. If I had posted all of these winners in here today, you would have seen a huge outlash in my chat room. But you didn't because they're true. They're real trades that happened. And I'm going to ask some people who are on the trial to come in and post some comments on the video so that you know that this is true. There's a lot of garbage out there. You should be skeptical of anybody posting a 30-0 record. So please take the trial. Come in, take a look, see if these are real. So the systematic approach that we've been using for day trading is we're looking for relative strength. We're always looking for relative strength. Let me go in, and I'm going to go into a 5-minute chart on the SPY right here, and I'm going to take a quick look at it. We're going to be in this trading range right here. This was the news that the stimulus bill was passed by the House. We tried to break out, tried to get in the gap right here. Didn't really work out. The market pulled back right away. This pullback tells me that the news is already priced in. There's no surprise to this. We're going into an election. Republicans and Democrats both want to save face. They don't want to look like the bad guy. They want to help the American worker, get the money out to everyone. So, yes, this was already priced in. I think today we're going to see just kind of sideways price action heading into the weekend. There is a bid, so I'm not expecting to see a big market decline like we've seen some Fridays. Could we see a big blow up rally like this? I'm not going to bet on that, not with the kind of lackluster price action we've had right here today in the compressed trading range. But could it happen? I don't know. I guess so if somebody really felt a burning desire to buy stock. I do have a couple of longs that I want to show you, and I am only trading from the long side because the price action has been so much more consistent. So let me bring up a chart here. I'm just going to go into INO because that was my first trade of the day, and we're going to take a look at that. These stocks, by the way, all came up on Option Stalker right out of the gate. And I got in INO right in here. I saw two long green candles closing on their high. And I'm going to put the SPY overlay up. And you'll be able to see the market at that same time. There you can see market down, down, down. Stock up, up. So I got long in here and took a 30-cent profit on that stock. And that is a $7 stock. So really nice gain. And I'm going to go back here so that you can see what the market looked like at the time instead of showing you what the market looks like right now. And so this is what I saw early in the day. Saw these big green candles, and this was happening to the market. It was down, so I bought here, sold here, had my target in instantly. As soon as I get long, I put the target out there. As soon as I get long, I put the target out there. Looking for these quick moves higher, wanting to take profits, wanting to get into cash. AMGN was another nice one, and it did nothing after that. It looked great on the open, and then it just did nothing. So AMGN, two long green candles, looks great, strong relative to the market, bought it, sold it up here. Now look, the stock's just kind of floundering around, not doing a lot. But I did get into some stocks that actually had some nice momentum. PSA was actually brought to my attention by a member in the chat room. Said, hey, this looks like a really good long in here. Green, green, green. I was like, yeah, I agree with you. I bought it somewhere in here. PSA, sold that one for a $1 profit. STZ was really nice this morning. So what was the market doing? It was coming in. We have this bullish hammer right in here, and the market started to find support. That's all I needed. I felt, okay, that's enough of an edge for me to lean on with some of these really strong stocks. STZ, I bought in here, sold that for $1 profit. RAD was one that we got in early today. I got it a little bit early on that one. I had to shoulder a little pain on it, but it worked out anyway. So we had this nice spike in here. I got long in here. Stock pulled back. Bought some more in here because I still felt very good about it. It was still holding up well relative to the market. Sold up in here. Took a very nice profit. You could see how that stock is continuing to grind higher. PSO is another one I did a little bit later in the day. You can see the steady grind in here. This is where I got in. I took a 7-cent profit on it. It's a $6 stock. Nice little gain. So those are the types of trades that we're finding. Netflix was another one. We had this excellent little compression right in here. And I could see the market starting to find support. Bought the stock in here. Compress, compress. Tail under body. Lift off. Took the profits. $3 gain. Out. Done. Back in cash. Wait for the next window of opportunity. Now, if I were trading the S&P 500 today, there'd be a whole lot of nothing going on. And I've been trying to encourage everybody in my videos not to trade the S&P 500. Trade stocks, look for relative strength, look for relative weakness. You can see these long tails, very, very choppy. This might look like compressed action, but these are probably $5 bars, 5 points on the S&P 500 up and down. Very, very difficult trading environment. So I promised you that I was going to find a couple of swing trades for you before I end the video. And I'm going to do that right now. So let's go in. I'm going to start with one that I showed you yesterday, which, by the way, I'm on Netflix right now. This actually looks really good. Netflix looks excellent. So I don't have to look any further than that. Saw Netflix on one of the searches. You can see it's above the major moving averages, currently on its high of the day. Yes, Netflix. I believe Ozark is going to be released tonight or today. That's one of their big series. Probably get a lot of people getting Netflix just for that. So Netflix looks great. Apple. I showed you Apple yesterday. Apple is above the 200-day moving average. Yesterday I mentioned to you if the market is able to close near the high of the day, which it did, if Apple is able to close above the 200-day moving average, which it did, I think it's a good swing trade. So if you took that trade and you saw the futures tank this morning, you're probably thinking, uh-oh, Apple, you have to ignore that bar. That was a massive 70-point S&P 500 bar yesterday out of nowhere, just a massive buy program. And that was quickly erased on the open today. But Apple has been able to hold its range from yesterday, even in a down day today. It's got some nice relative strength. You can see the orange line above zero. It's been able to hold the 200-day moving average. So I still like Apple. I think Apple will be good. So Pete, you're telling me to go and buy Apple right now because you like it and you like the market. No, I think you should sell some out of the money bullish put spreads on the stock. I think that's the best way to go. But I want to buy some calls right now. Well, good luck with that. I would not buy calls on Apple. That's just me personally. And if I could come down and sell a bullish put spread somewhere off of this 224 strike price and really distance myself from the action and get below this long green bar, which should probably be support, I'd like it even better. So let's go in and see if we can find another one. And I'm going to show you a search that I ran. Very easy search for swing traders. This is an option stalker. I'm going to mark off trade signal on our system, 2-hour, 4-hour, daily basis. Going to do the same thing for strength versus SPY, daily, 4-hour, 2-hour. And I'm going to mark liquid options, like to have some decent option liquidity. These are the stocks that come up. And there are a lot of really good picks in here. Love Cisco. Think that's a good one. I'm going to show you NVIDIA. I like NVIDIA. I think that's a really good one too. So, going to go in, take a look at those two. And we'll do a little bit of fundamental analysis. We got the 100-day moving average right here. This is nice. So, Pete, do I buy NVIDIA right now? Right now? Is this the time? No. Try and sell that bullish put spread below that 240 level. Lean on that 100-day moving average. Expect some market weakness. We have to expect some market weakness. We are not going to be V bottom off to the races. There's going to be some nasty news coming out in the course of the next couple weeks. We need to plan for that. We need to give ourselves that breathing room. Once we have clarity 2 or 3 months from now, then we'll be able to spread our wings. Then we'll be able to watch the price action, gauge the earnings, gauge the guidance, and then we can sink our teeth into a move. Not now. So, yes, even below this gap right in here, anywhere where you can distance yourself from the action on NVIDIA and sell out of the money premium, I would go as far out as I possibly could, and I would look to that April 17th expiration date. Let's bring up the option chain here. Let's see where those are trading. Well, gee, Pete, I don't know how to sell put spreads. I'm not comfortable with that strategy. I understand that. Then you need to learn it. Options Industry Council, OIC, free education. That's a great resource. Highly suggest that you go check it out. So let's take a look at something. We can go way out of the money down here. 225s. We can even go down to the 200s and see if there's any premium in that. Not a lot of premium from what I can see. Go down to the 200 strike price. Click the 350 puts. Click the 195 puts, you got a 5-point spread there. I would like to get $1 for that. It's currently 45 cents bid, offered at 72 cents. If you get a little bit of a pullback in NVIDIA in the next day or two and it gets down to that 100-day moving average and the 100-day moving average is holding, you probably would be able to sell the 200 195 put spread expiring April 17th for $1. If I can bring in $1 for that, I have to put up $4 in margin to make $1. That's a 25% return if it expires worthless. And that takes me all the way down to this support right in here, below the 200-day moving average. Yeah, that's how we structure swing trades. That's how you need to approach this market. Expect the worst. This is a global issue. We've never seen a market sell off like this. You can expect lots more damage. Distance yourself from the action. Take advantage of these high option implied volatilities. That is the way that you need to play this right now. And I'm sorry if I sound like I'm lecturing you, but I've got a lot of new traders who are coming in and I'm getting pestered every day. Do I buy now? Do I buy now? Is this the one? Do I buy now? Looks good. How about now? No. This is the strategy that you need to use. So, for those of you who are on board with this and understand this, I apologize for having to pound this home, but this is something that I'm really having to deal a lot with. And maybe part of it is because my YouTube channel is getting a lot of viewership. So, if you're new to trading options, you should learn two basic strategies. One is option buying. That only works about 20% of the time ever from a swing basis. The other 80% of the time, you need to focus on selling strategies. So learn about vertical spreads, bullish put spreads, put credit spreads. That's what you need to be focusing on right now. So yes, I do like NVIDIA. If I can distance myself from the action, I think that this is an excellent stock. We're going to go into that stock ER and you'll see that they've got a ton of cash. They've got $17+ in cash, only $4 in debt. So lots of cash to operate with. They're not going to be in a pinch. They can get through this. And you can see that at a forward PE of 22, it's reasonably priced. It's not a cheap stock because it's got huge growth. You can click on this, find out what their last earnings report was, find out what their growth rate was, and you can see that their revenues were up huge. I believe their diluted earnings per share were up 66%. So that's the type of research and analysis that you need to do on these stocks. You need to find the best stocks. I believe there's a really strong demand right now for PCs and computers with everybody being stuck at home. So that might also benefit NVIDIA, but they're also in all the new cameras that are going into cars. REGN looks like it just got filled because I placed that alert above my trade level, and let's take a look at that very quickly. Actually, it's on the lower end of it, so I may have to stop out of that soon, but I'm not going to worry about that right now. I want to show you the rest of NVIDIA, and then I'm going to see if I've got one more stock that I can show you that sets up well for a swing trade. So NVIDIA, you can see nice upward sloping trend line here. It's above the prior day's high. NVIDIA looks really, really solid. So I like that for a swing. And I also looked at STX. I think STX also looks pretty good. We'll bring that up. Also in the computer space, you can see how it's actually above the high from yesterday. That's nice. That was another one that came up on our search. It's not above the major moving averages, but you can see a nice rally off of the low. If you could sell a bullish put spread below that $40 strike price, I think that would be an excellent trade as well. Let's bring that up and take a look at those April 17s. And we'll go down to that $40 strike price. And you can see these options are completely out of whack here. Got 49-cent bid here offered at $1.51. So a little bit too wide in terms of STX and trying to get a spread off at that $40 level. Don't know that I'd want to go too much closer, maybe 42, but that's the problem with doing option spreads right now. Here's how I would approach it if I wanted to get a spread done. Let's say that I wanted to sell the 42 put and buy the 41 put. I need to get a 25% return on my investment. So there's $1 between the two strike prices. That means that I need to get a 20-cent credit for this. I would put that spread out there for a 20-cent credit. That's it. That's how I would approach it. You can take a look at the bid-ask spreads all you want and try and figure out where you can get a trade-off right now. You got to go into it and know what credit you would be willing to take for that risk and place the trade, see if you get filled. That's how we're currently doing it. I like NVIDIA. I like STX. I think both stocks look nice. I would focus on selling out of the money premium. By the way, let's take one quick look here on that $40 put to see what we'd be able to do there. So you've got 49-cent bid offered at $1.21. You should be able to get at least, let's say you can get 80 cents for that put. So you would be saying if it goes down to $40, I'd be willing to buy in. I'm going to sell that put naked. If you can sell that put for 80 cents, which is pretty doable, that's going to represent a 10% return, and you've got 3 weeks from now until April expiration, 4 weeks that you have to get through. You'd make a 10% return in 4 weeks, and the stock has about $8 of room, or 20%. That stock would have to fall 20% in the next 4 weeks for you to run the risk of assignment, and I wouldn't have a stop on it. If that stock goes below $40, I'd buy it at $40 if I'm assigned, because as soon as we're assigned, we're going to be buying these stocks at unbelievable values, and then we're going to be selling really expensive calls against those stocks, which will give us added protection. And we'll be able to, when the dust settles, take the put premium that we collected, take the call premium collected, and we'll be up by that amount, generate really nice income. That's how you got to approach the market right now. This is not go off to the races. Yes, we got a lot of stimulus coming in, but there's a reason for the stimulus. This is really bad from an economic standpoint, and hopefully we're not going to have any credit issues coming. So expect plenty of bounces. There is a bid to the market. I am preferring to trade from the long side. That's how I'm approaching all of my day trades. And so my approach each day has been, if the market's weak, let it come in, let it come in, let it come in. Evaluate the stocks with relative strength. As the market starts to find support, buy. Wait for that pop in the market. Have my targets out there. Fill. Back in cash. Wait for the next opportunity. Maybe there won't be anything. I had I think it was 8 wins yesterday, very quickly during the day. Started to get into a sideways market, didn't see anything. I was going to wait for a closing move. Didn't think I'd have another opportunity. And then, whoa, what's this? Look at this move out of nowhere. Started evaluating relative strength, found 3 other stocks that had really good relative strength, waited for the market to find support. Buy. Hit target, out. Done for the day. If I see a nice move today that comes out of nowhere like this, yep, I'll probably be back in action. If I don't get something good like that, I'm going to stay on the sidelines. Part of being a good trader is knowing when not to trade. And in this chop right here, there's nothing there for me. So I'm going to wait it out, see if I can find something into the close. Ideally, I'd find a lottery trade on a Friday, but the option bid-ask spreads have been so wide and the option premiums are so high, there just hasn't been anything worthwhile in the last 4 or 5 weeks. So I'll be looking, but probably won't find anything. Thanks again for bearing with me. I hope if you're a young trader, a new trader, that you take my advice on this and listen to what I'm telling you. You have to be a premium seller in this environment. If you're a seasoned trader, then you know exactly what I'm talking about. That's the strategy we want to use for the next 2 or 3 weeks. Sell that high implied volatility. Let the market shake off some of these jitters for the next few weeks. Take that income. And then as the dust starts to settle, we'll have some better opportunities, maybe a month and a half from now. Who knows? Maybe we could even be buying calls as long as the IVs come in. Thank you. Have a great weekend. If you like the content, please give it a thumbs up. Subscribe to this YouTube channel. Turn on your notifications, and you'll never miss these videos. I promise I'll have a new trade that you can get into in every single one of them. Thank you. Have a good weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.